All right, let's get started right away. Hello, everybody. Happy Monday. Let's review the news. Dow Jones up 0.4%, Nasdaq up 0.2%, S&P 500 up 0.5%, Russell 2000 up 0.3%. The mixed bag today. Apple is up. Everything else very choppy. Treasury yields are down. The 30-year Treasury yield is down only 3 basis points. 5-year Treasury yield is down 10 basis points. The probability of a rate cut in May is about 15-20% still. Oil prices are at $60 per barrel. Lots of confusion around tariffs continues. If you have any questions, comments, please request to speak or leave a comment in YouTube. Let's read through this Reuters article. Wall Street's main indices rose on Monday, but were well below off-session highs as an early rally in technology stocks after the White House exempted smartphones and computers from new tariffs gave way to worries about economic growth and future levies. The US unveiled the exemptions on Friday, but Trump said he would announce tariff rates for imported semiconductors later in the week. The exempted tech product will face new duties within the next 2 months, US Commerce Secretary Howard Lutnick said. These product categories make up about 20% of US imports in China, according to Deutsche Bank. Indices had jumped at the open, but the tech-heavy Nasdaq up over 2%, but they paired gains late morning trading. We're continuously told by Trump administration that these pauses are temporary and they're not concessions long term. The market is grappling with that, said a CIO at Jewel Financial. Apple up 2%, while PC maker HP and retailer Best Buy gained 1.5% and 1.8% respectively. Most other mega cap stocks reversed course, with Nvidia falling about 1%, Amazon down 2%, while the Philadelphia Semiconductor Index was slightly lower. Tariff exemptions on certain electronics, while welcome, are emblematic of Trump's back and forth trade policies that have escalated tensions between the US and China and triggered the wildest swings on Wall Street in years. S&P 500 notched its biggest weekly gain on Friday since November 2023, after its worst sell-off since 2020, the week before that. I'm going to skip this nonsense here. CBO VIX is about 33. Okay, so it's coming down from its highs a little bit. Goldman Sachs shares rose 1% after the bank reported higher first quarter profit. Okay. Obesity drug makers gained after Pfizer said it would end the development of its experimental weight loss pill. Eli Lilly and Viking Therapeutics were up 1% and 8% respectively. Commentary from U.S. Federal Reserve Chair Jerome Powell and retail sales data for March, both expected on Wednesday, will also be closely watched. Yeah, so we have the retail numbers coming out this week. It sounds like there's some pull forward of spending, consumer spending and business spending, and also imports from Q2 to Q1, but nobody really knows how much. We don't really know exactly what amount was pulled forward, and we're not going to know that until Q2, Q3 numbers come out. So the primary thing here is that there's a ton of uncertainty around these tariffs, and that's not going to resolve anytime soon. Like, even if Trump came out today and said all tariffs are eliminated, no more tariffs, I'm sorry. Even if he said that, the economic data would still be very choppy and unreliable for the next couple of months. And with that in mind, I think Powell will probably comment about the uncertainty. He's going to emphasize that they want to make sure these near-term inflation expectation surges don't translate to long-term inflation expectations. I mean, even today, I think New York Fed inflation expectation was kind of it was seen as, oh, that's still at 3%, even though University of Michigan is surging 5, 6, 7%. That showed a pretty big uptick to get today as well. It's still not nearly as high as University of Michigan, but it's still at alarming levels. So the near-term inflation expectations are a big concern for the Fed, and I wouldn't expect, despite the fact that inflation numbers, both CPI and PPI, came in lower than expected last week, and I think PCE is going to be about close to 0% for March. Um, Despite that, I don't think the Fed will take a dovish stance as the markets expect. So we should see the May rate cut expectations converge towards 0% in the next 2 weeks until the Fed's next meeting, and then we'll wait for data to come in for April. I mean, I guess, yeah, still some March for retail sales, and then April, May, June. Advancing issues outnumbered declined by 2-to-1 ratio in NYSE and 1.4-to-1 ratio on Nasdaq. All right, let me see if there's any other news here. Um, I think there were a lot of people expecting the Fed to step in last week as volatility emerged, and some people pointed to basis trades unwinding. Some people pointed to foreign investors selling U.S. securities as the reason why U.S. dollar was weakening as Treasury yields were surging. And but I looked a little deeper into the data over the weekend and thought a little bit more. Listened to some interviews, talked to some people, and it's not really certain what actually happened, except to say that um, both survey data and um, hard data shows inflation expectations are surging, which, all else equal, um, should lead to a weakening in the currency. So versus other assets. So I think that's part of it, but I think also part of it is just this is just very short term. And I don't think the Fed even came close to interfering with the markets last week. So that's my kind of base assumption here, and then um, I'm going to kind of build up on that as data rolls in. Let's look at if there are any news on Tesla. Elon has a bunch of posts about FSD, but I'm not really seeing any change from what we discussed. I think it's going to take 5 to 10 years for FSD to, um, become, nationwide adoption. China has, I think, made a comment or maybe restricted rare earth element, rare earth exports to U.S. China has suspended exports of certain rare earth minerals and magnets to the U.S. around the world. China is drafting a new regulatory approach to minerals, to prevent them reaching American companies. Um, I think after a certain point of tariff rates, it's kind of mute what happens beyond that, because, like, if, let's say, I'm just making up a number, if 20, 30% tariffs reduces trade between two countries to essentially zero, it doesn't matter if the rate is 20, 30% or 200%. Um, so I think that's why China is kind of looking at other options in terms of responding to US tariffs. And one of those could be limiting, such as, these exports that are critical for some companies, especially EV companies like Tesla. And then, the other could be limiting the business of American companies in China, basically closing the market to China, to US companies, and which is what the US government is doing in China. So, but, essentially, any of this, let alone any escalation, even if the current state of events continue for a few months, it's going to be extremely detrimental for the global economy. And I don't see this I don't see this tension easing up anytime soon geopolitically. I don't think, as far as I see it, I think China kind of holds the cards here. I think China is just waiting for Trump to spiral out of control with his back and forth. And I listened to a Steve Bannon interview just now, and it doesn't appear to me that Trump is anywhere close to. Um, I mean, I guess I also listened to Olin podcast interview over the weekend as well, and David Sachs was saying that there's a lot of different competing, you know, segments of the Trump administration about tariffs, and since it sounds like a very kind of intense internal battle going on about tariffs, and but Peter Navarra and Steve Bannon, like these are very close confidants of Trump over the years. They kind of proven their trustworthiness, I suppose, as far as Trump is concerned. I'm trying to put my shoes, look at the situation through Trump's eyes here, and um, I think they see, I guess, this so-called Trump put on markets at a very low level. Like they are not concerned. These folks, and I guess this also includes Besson as well. These folks are not concerned about the stock market dropping 10, 20, 30%. It's almost like they welcome it. Um, and so I don't think that's out of the question. I don't think stock market is dropping a lot more than where they are today is out of the question. And in fact, I think that's the likely scenario. Um, so I don't think Trump or that part of the administration is worried about that, or they're going to do anything, or going to back off from tariffs to prevent that either. I think one thing that really concerned people is these US Treasury yields surging over the last week or two, or over the last few days, really, to 4.5 on the 10-year and almost 5% on the 30-year. And I think it would be concerning if it was true that the global investment community was deciding US is not reliable, that US dollar is not going to be the reserve currency going forward. Um, if that was true, I think that would be a big problem for the US. However, I don't think that sort of entrenched um, um, foundation of the global financial system is going to change overnight, and I don't think it's going to change over a year or two either. I think that would take decades to change. So, and the treasury auctions came in fine. Like they last two, Janet Yellen on the interview this morning also said the same thing, that she was watching these, the 30-year auction and the 10-year auction that went fine. It was higher yields, but everything functioned as they supposed to. And so I think that's what we have in our hands right now. It's a well-functioning financial market. There is some structural changes going on in the global trade that I think will happen. Like I don't think Trump is going to back off um, anytime soon, unless things really get out of hand. Like yields surge to like 6, 7% on the long end, or markets drop like 50%, or US dollar loses 20% of its value against other currencies. Kind of like those are the kind of level of changes that I think it would take for the administration to really back off from this tariff talk. Um, so given that tariffs are happening, I just can't see how this is helpful for GDP growth or inflation or monetary policy, employment in the near term. So that's the backdrop. That's the backdrop. Um, Let me see if there's any other news here. All right, that's it. Thank you very much, everybody, and I will chat with you all next time. Take care.